Okay, everyone. Matt with Greenbar Trading here. Welcome back to another weekly watch list video where we go over everything you need to know for the week ahead. So if you're new, consider subscribing, hit the thumbs up for the video, and let's get right into it. So this is the earnings for the week. This is what you guys are looking at right here on the screen. We start every weekly watch list video with this because we are in earnings season, all right? This is a lot of fun, and we get a lot of volatility, a lot of chances to make that money, all right? So these are the companies that have earnings this week. We had earnings on Friday from the banks, and we're going to get into what they said in a second. We're also going to go over the economic calendar here in a minute and some of the sectors that are starting to show a lot of, hot trading. Let's get right into it. We're going to start right here with the sectors and what was hot last week, what has been hot so far this year. Very short year, right? So far, it's only been 2 weeks. That first week was a short week, so I'm not going to put, that much emphasis on what we've seen so far in the market. But we've seen a lot of strength. We have definitely seen a lot of strength in the market, so we need to call it what it is right now. It is a market in a current uptrend, but we are coming into some serious resistance. And the market is a little hot right now. The RSI, etc. I'll get into the charts in a second. But what we see here, we see those consumer discretionaries actually catching a bid. You can see right here, 1 week relative performance, that has outperformed every other sector. All right. Usually in a market where the possibility for recession is coming, you would not see a consumer discretionary as the leader. We've also seen a lot of, crazy trading with the meme stocks. We've seen a lot of stocks that were beaten down last year, that have absolutely killed it so far this year. Now, do I think that's going to last? No, I don't, because we're still in that Fed tightening cycle, and we're not going to fight the Fed, just like we weren't going to fight the Fed in 2020 and 2021 when the money was easy and we saw the markets going straight up. So anyway, just here to show you guys what we're seeing right now. And also, technology has been very, very hot. The NASDAQ up almost 6% on the year. The S&P up over 4% on the year. So, things are looking really good there. This is what's hot right now. All right, so let's go over to the economic calendar, what we saw over here last week. So on Thursday, we saw the CPI. Now, the CPI came in at exactly estimated, right? So there was no surprise to the downside. There was no surprise to the upside. It came in as expected, all right? So, we saw our last report last month was 7.1, came all the way down to 6.5. So inflation, we know, is coming down. That's a good thing. Now, why didn't the market rip up out of control on Thursday? Why did it actually go down first? All right. That has nothing to do with the CPI report. Now, we saw a lot of volatility, but when something is coming in line and the market was already up a lot Monday, Tuesday, Wednesday, up to that print, you already have that news baked in. So that's why we saw a more tame day. Now, if this would have missed, then you have a different story there. While we ran up to the number because we wanted to see that expected come in, if that missed, then you could have seen a bigger move to the downside. All right, so that was CPI on Thursday. Friday, we had the University of Michigan Consumer Sentiment Index and some Fed speakers. The Fed speakers last week have been steadfast that they were going to keep rates higher for longer. The bond market disagrees. The equity market disagrees so far. All right, so that's going to be a very big issue going into, the next FOMC. The Fed does not like when the market is not pricing in where they see their Fed funds rate going. And that bond market is simply not believing the Fed. The bond market is suggesting that they're going to have to pivot quicker and they're going to have to lower rates, even though nobody has said they were going to lower rates this year. All right, so that's what we saw. And coming up this week, this is the economic calendar here. Monday, the market is closed. Tuesday, nothing big. Wednesday, we have retail sales, and we have the producer price index. Beige book at 2 o'clock. That's a lot of economic data that gets passed over to the Fed. Thursday, initial jobless claims. This has been moving markets. And then you have another Fed speaker on Friday. So that's the economic calendar. We do not want to forget when really important things are happening in the market. This market has never moved more on news than it is now. All right. So what did we see from the banks? We saw the banks saying they're going to be preparing for a potential recession in 2023. Now, they didn't say, when this recession might happen, but all the banks are setting aside billions of dollars to protect themselves from bad credit loans. All right. So if people start, the consumer really weakens and they can't pay back their loans, the banks are now going to be in a better position going forward in case that happens. But it's still kind of scary when the banks have to even do this. Like JP Morgan, they're doing it. Everybody has done it. Now, that's probably a good thing, but it's also telling us something. These companies, the banks, they're able to see into our accounts. They're able to see into their credit accounts, the credit card balances, what the consumer is doing. And they're telling you right here that they're preparing for a downturn. All right. So that's the news right there. That's the banks, the earnings, the economic calendar, the sectors for the week. Now we go over to the compass, the SPY. We're always going to start there. And where do we see the market going? Right now, the market looks strong. We're over the 50 moving average. We were not last week when we made this video. We were coming up to it, just about trying to break it, but didn't happen. We saw that breakout right here on Monday, only to pull on back, so a false breakout. And then we saw another opportunity, chance to break that 50 moving average, actually closed above it, and then really never looked back, got to the 200 moving average, pulled on back, and then rallied right up into that trend line, right up into this point of control, this volume ledge. All right, so that's where we stand now. The RSI looking like it's getting very strong. All right, there's definitely possibilities for this to move higher, but this is a straight line up. We usually see some pullbacks along the way. All right, and we are at this downtrend line. We're at a very critical area right now. And I said this in our Discord, in our live streams, that, this past Friday and Tuesday, because Monday the market's closed, it's going to be a very critical trading day. And Wednesday, going to be a very critical trading day. We're in that very interesting spot right now that I would either wait for a breakout, and if we do catch a break of trend, I think a lot of people are going to be trying to get long because it's going to be the first break of that down trend line that has been for over a year we could not break. If we do, you have this spot right here, right? This little vacuum area that price can easily make its way through, and then you have that resistance right up here at 410 on SPY. All right, right at this next volume profile level. That's if on Tuesday the market breaks out, or Wednesday if the market breaks out. We might be in a spot here where we are kind of, stagnant for a little bit before the move happens because we just saw a big move. All right, so that's the SPY. Now on the Qs, same thing is happening. A very nice bounce we've seen right here. We're over the 50 moving average, but we're right there into the point of control. The point of control sits right here, right where we closed. This is resistance, right? It was support all along here. Now it's going to be resistance. You have that down trend line. 200 is still over here. A lot of overhead supply on the Qs. So this one, we've seen a 6% rally. We've seen an RSI indicator that has had a straight up line. I would be very cautious going and putting all your eggs in the QQQ right now. That's just me. I need to wait and see if these things break out. This is a lot of overhead supply. If you look at this on the weekly chart, look where we're coming to with the Qs. We're coming to that point of control on the weekly as well. This is where a lot of the volume happened. So you're going to see some resistance. All right. We've seen a great move. This weekly candle right here for the first week, that was a very bullish candle. All right. I'll just zoom in a little bit on this. That was a bullish candle we saw. Very bullish candle. And we saw continuation. But now we're coming up to that downtrend line on the weekly. All right. So that's something to just be aware of. It's my job to show you guys this stuff from bigger time frames and where we are. Yes, it was a great move, but we're still right in that, supply. All right. We're right in where we were, but we have not cracked. We have not broken out yet. Wait for that breakout. Wait for breakouts, retests. But this market has shown that it's had a lot of false breakouts and false breakdowns. So just be aware of that. So that's the Qs. On the Dow Jones, this one outperformed every other index last year, and it's doing the same thing. Very, very strong. Just broke its point of control on the daily chart, and now it's looking to get back to those highs. Those highs we saw up here at 360, and it's not that far away. So that's the Dow, very strong on that. IWM is coming into a very critical area. This 188 to 190 has been resistance. The IWM has been a very strong performer, up almost 8% on the year. A lot of times in January, you will see these small cap stocks have really good months. It's called the January effect. You guys can look it up. You can Google it. It's definitely a thing. All the really beaten down stocks from the year before tend to catch a bid in January. And that's what we've seen here, up 8%, but coming into some serious resistance here. If it does break this, then you have that vacuum here to the point of control up here at almost 200. And if you got to move up there, that would be just an amazing move. We've seen big moves before on the Russell, like back here in June, July, we've seen 20% moves. So it's possible, all right? We're just going to have to wait and see what happens there. But that's the IWM. Now I'm going to take off this volume profile. Actually, I'm going to remove all those. And then we're going to take a look here at the VIX. The VIX is at all-time lows for the past year. Hit a low of 18. When the VIX goes down, our market goes up. So when the VIX came down here and then we saw the bounce, this was our market going down and then chopping around, and then we got that breakout that we just saw over the past 4 or 5 days, and that's where we've seen the VIX really pull on back. The VIX is the fear index. The lower this is, the less fear in the market. Now, it's also been a spot to sell, right? These were all at highs in the market. These were all at highs down here when the VIX was at the lows. And then we see the market go down as the VIX goes up. We have a lot of space here for another spike. These spikes that we've seen just about, every few months or so, we've seen these spikes up to this top level. All year long, we have nothing here. We have a very quiet market right here. All right. So is it possible to see some more downside? Yeah, it definitely is. I mean, we're going to have to wait and see about recession, Fed, earnings season. There's a lot to look at. So one thing I do have to show you guys is our trades that we took last week on our Sunday picks for the week. This is something that we show, every week. These were my picks, and they absolutely killed it. If anybody got into these plays, leave a message down in the comment section. So this right here, NUGT, this will give you double exposure to the gold miners. Now, GOLD, this is Barrick Gold. It's one of the gold miners that I really, really liked. All right, Nugget is just the leveraged version of this. So this is going to go up double the amount that the normal ones would go up. So going back over to the charts, if we take a look at them and where they've gone, well, this one has gone up almost 10%. This is Nugget since I had the call out. Now, I've been liking gold since this show of the uptrend. So before the year even started, I've really liked gold. And we've seen that to start the year. This is a lot of institutional money coming in. It's going to continue. So wait for some pullbacks to get into this. This is Nugget. I'm still, like I wrote over there on my Sunday picks for the list, my Sunday picks for the week. This is one of my favorites for the whole year. And we've already seen a massive move. So gold is another one. This has had a tremendous breakout. From when I called this in our Discord a couple of weeks ago, this is something we were playing. We saw right here. Now this day got me confused. We saw the breakout of this level that I've been looking at, saw the breakout, and then it pulled on back for the next 3 days. And then the new year starts, it gaps up, and then takes off. That's why this one was on our weekly watch list video right here. And it's been a very, very, very good play. Totally outperforming. A chart that looks like it's going from bearish to now a bullish breakout. All right. So that's gold. Meta was another one that I had liked. And XLE, we were going to be getting short if it reversed at its 50-day moving average. We'll take a look at that one right here. All right. So right here, we were looking at this rejection at the 50 moving average. If we continue to reject, this gives us some opportunities to take it short. Now, once it breaks, we don't want to be short this anymore. All right. But this is why I just want to let you guys know charts that I'm looking at. This chart is in an obvious uptrend. The chart has been uptrending for a very long time. We don't want to be against this until it really shows that the trade is over. And with oil prices and China reopening, this one can continue higher. So now that we're over the 50, I want this for a move to all-time highs. All right, so that's where, once that 50 moving average breaks, I really like this one now. For the short term, until recession talk starts to really take over, and then demand for oil for the economy will start to come on down. All right, so guys, I hope you enjoyed the video. Please hit that thumbs up for me. If you're new, subscribe. I'll see you back on the next one. Take care, guys.